Hello everyone, this is Michael Whitman, and in this video we will be going over an introduction to the profitable world of technical analysis. This tutorial is designed for those people who are new to trading stocks or options and want to make consistent profits. In the past 3 months I have made over $50,000 using simple technical analysis on stocks like Facebook and Apple. During this tutorial we will be covering properly reading charts, understanding volume, moving averages, indicators, and the right mindset for trading. I have broken down this tutorial into bite-sized fragments so you are not overwhelmed by all of the information. Let's dive in with today's topic, which is reading charts. Here we have a beautiful chart of Tesla. Charts usually have 4 main components to them: the x-axis, the y-axis, the time range, and the candles themselves. Now for the x-axis, this is usually going to be a measurement of time. You can see August, September, October, November, December. But if I were to change it to a 1-minute chart, you can see that this time would change. Now it's 10:15 a.m., 10:30 a.m., 10:45, moving at much smaller increments. For the y-axis, this is usually how much the security is going to cost. This is normally in dollars, but if you're doing crypto, it may be in another form of currency. Now for time ranges, these can be pretty complicated, but most of the time, if you're a day trader, you're going to be sticking to 1 minute to 5 minute, maybe 15 minutes. If you like to swing trade for multiple days or weeks, you're going to be spending most of your time on day charts or hourly charts. And if you're looking for long-term investing, then you may be looking for a week chart, which shows a lot of information in a short amount of space. Now let's focus on the candles themselves, because this is where most traders seem to get into trouble. As far as candles go, this is the gold standard. I know many of you guys use Robinhood and a lot of you guys use line charts. I highly recommend you click the button next to the 5-year chart and it will turn that line chart into a bar chart. That way you guys can use proper candles, because this will be crucial, because you will not be on Robinhood forever. You will move up to a TD Ameritrade, a Fidelity, a Schwab, etc. A candle has 2 main parts: the wicks and the body. A red candle occurs when the price at market close is lower than the price at market open, and a green candle occurs when the price at market close is higher than the price at market open. Here is where most new traders will get tripped up. Can a stock have a green day but produce a red candle, or a stock have a red day but produce a green candle? The answer is 100% yes. Let's go back to that Tesla chart because it had a great example for us. If I zoom in right here, you're going to see 2 red bars. Now, if I get out of the daily chart mode and I go into the minute chart mode, or better yet, the 5-minute chart mode, you're going to see something very, very different. Now, this is the first red bar, and this is the second red bar, and you're going to see something pretty interesting here. You can see it actually gapped up from the night before, so all of the movement happened after hours and during pre-market hours, and the same with the next red bar. But because the price closed lower than the market price at open, you can see that that translated into a red bar. And again, it opened up higher than what it closed at, so it was a red bar. But it was still higher than the last day. But all of that movement occurred during after hours session and pre-market session, which is not shown in candle bar charts. During our next video, we will be going over moving averages and volume. So please make sure to subscribe, and if you guys have any questions whatsoever, please make sure to comment them down below, and I promise I will get back to them as soon as I can.